biggest challenges buyers are facing in today's market?
Oh, boy, that's a good one. All right. So let's knock this out. So, first of all, before we get into buyers, let's talk about people that already own a home because there's challenges for them right off the bat. They are a buyer, but they're also a seller. So then you've got the move up buyer, Chris, and you deal with this every day in real estate. So you've got somebody that needs a bigger home. Their family's expanded for what maybe downsize. Could be any number of reasons, but they're sitting on a 3% 30-year fixed rate that they got during COVID, and they don't want to pay a 6.75% rate that they would get today.
Right.
So they have that apprehension. So they're like, how I don't want to leave this great rate to go to another rate, but I really need another house. So that's one of the challenges that move up buyers have.
Yep.
Then you have you've got your first time home buyers. They are challenged with cash to close. They don't always have a lot of disposable cash. We've been experiencing high inflation, and that's really drained people's savings. So there's not a lot of disposable cash. So they may be short on money to buy a home. Maybe their debt ratio is a little bit higher because things have gotten more expensive, and now their debt ratios are a challenge. So there's all kinds of different things that people face when it comes to challenges with interest rates. But I believe that it is the perceived interest rate. So you think right now, okay, people are a little challenged because interest rates are a little bit higher than they saw during COVID and even pre-COVID,
yes.
Right? So they were in the 2s, 3s, and 4s.
Right.
Now, when they see 6s or 7s, they start to get a little freaky. But do you know what the average rate is over the last 30 years here in the United States?
I'm just going to throw out there, I think it's probably 7%.
It's about 7.5%.
7. Yep.
Okay. So if you're doing better than 7.5%, consider it a blessing. We're doing okay.
Yep.
So it's all about perception, because if we went to an interest rate of 10.5% for the next 5 years,
we're priced out,
and it dropped to 8, you'd think you won the lottery at 8.
Correct.
Okay? So it's all perception. Look at, we all want the best interest rate we can get, but nobody controls what the market is. The market is what the market is. But I will tell you one thing, you have to be in the housing market no matter what interest rates are. My home that I made the most money on, I was paying 9.75% on a monthly adjustable rate. So I'm telling you, I made a ton of money on that house. If I would have said, rates are too high, I would have missed out on the opportunity.
Right.
So, my friend Warren Buffett always says, be greedy when others are fearful and be fearful when others are greedy. So listen, you got to be in the game. Don't be a tenant on the planet Earth. Be a homeowner. You'll always end up in better shape.
Exactly. Don't wait for that rate.
Don't wait for the rate. That's what rate apprehension will do for you. It will cost you. Does that answer your question?
Absolutely.
Perfect.